Stocks come tumbling lower. Jamie Dimon makes an announcement and the fear and greed index is sitting at 20. Is the market headed for a bounce or are we going to continue to cascade lower? Today, we see Airbnb stock is on pace for its biggest percentage drop ever. And if we look at Airbnb real quick, what do we see? Basically a spinning top type of candle. We have a candle of indecision. We have a wick on the top, a wick on the bottom. Now the question is, will the buyers be able to step back in? We look right over here to the left. We previously had support in the market. Now what do we see? We see the market dropping down here substantially, giving us a candle of indecision. If we look at the volatility index, we saw the VIX today was up a whopping 14 cents, but we are still elevated. We are still sitting at 27.84. And that's why we see the markets big move up, big move down. That is a very normal occurrence. Now, if we look at what Jamie Dimon had to say, investors overreacted and recession odds remain about the same. Now, recession odds could remain the same, but has anything really changed? Regardless if Jamie Dimon says everybody overreacted, and I do agree there was a slight bit overreaction, but does that really change the odds? We all know we are in a recession or we are very close to it, all right? It has nothing to do with the recent stock market price action. We look right here, last night during the live stream, we saw the Nikkei, the yen rocketing up higher, causing the NASDAQ and S&P to also go substantially higher. The Bank of Japan walks back talk of rate increases after roiling markets. So if you guys don't think the stock market has the ability to influence the powers to be, think again, all right? When the stock market starts selling off, people panic and then they're like, uh-oh, we were just kidding. We're not going to really keep raising rates. We look right here, Disney stock down after first ever streaming profit. And what it goes on to say is basically the theme parks are not getting the business they want to see. We look at Disney stock today down 4.46%. And I want you guys to think about that narrative as well. If more people are not going to the parks and spending money, isn't that also a sign that the economy is slowing down? Let me know your thoughts in the comment section down below. We look at how the sectors finished out today. The Dow was down 234 points. The NASDAQ was down 171 points. S&P 500 was down 40.5 points. And the Russell 2000 was down 2.42 points. Now today, the advancing issues versus declining, very disappointing out there for the bulls. We had 64.5% of issues declining on the day. We come over and we look at the sectors and it was kind of a mixed bag, right? We had more red than green. The ones that were in the green weren't in the green near as much as the red. But, you know, for the most part, we have a lot of red out here in these markets. Now, we come over and we look at the charts. What do we want to see? The dollar index also coming up a little bit higher. And one of the areas I want to watch is basically this little swing point. Candle wick to the candle body gives us a little structure breakdown point. We should come back and retest that. Normally, as the dollar gains strength, that's normally not favorable for the market. However, when times get like they are now and fear really creeps into the market, we can see the dollar continuing to cascade lower. Now, if the dollar is going to cascade lower, why is gold not going up higher? Keep in mind, we kind of have resistance up here in gold. If gold comes up here again, I do believe that resistance level will likely be broken and we'll see gold marching substantially higher. However, if we start breaking the swing point right here at about 24.01, watch out. We're probably going to come back and retest this area over here about 23.56. We breached that. I'm looking down here towards about around 23.24, right in the middle of the minus development area. We breached that. Then I'm looking all the way down here about 22.58. If we can firm up though, and we start making a rally attempt near these highs, I do expect gold will probably break out, make a run to the all-time highs, and go ahead and complete the ABC structure to the upside. We come over and look at the IWM, a big, nasty, bearish engulfing candle today. And now the question is, on the daily chart, are we about to start to turn? The MACD indicator right now is not suggesting it, nor is it suggesting it when the Dow, the MACD indicator looks horrible. And you can see we basically gave up the ghost today. We opened way up higher only to come lower. We actually went higher than the high from yesterday. We didn't go high enough to fill the gap and we closed near the lows of the session. That is another bearish tone out here for the markets. We look right here at the QQQs. I want to bring something to your attention. On the daily chart, the MACD indicator looks extremely horrible. On the weekly chart, however, the MACD indicator is just crossed and just getting started to the downside. So we could be in for trouble for the next couple of weeks or even months. So if you think all the selling is done, we might want to think again, could this be setting up on the weekly left shoulder? Head, we get a little bounce up for the right shoulder, and then the finale comes in and we come cascading lower. That's something that is on my radar. I want to see if indeed it does develop. Out here on the 4-hour chart, we see the MACD indicator trying to base out, showing signs that, hey, maybe, just maybe, we've gone a little bit too far, too fast, and we're going to try to get a little bit of a relief bounce on the way up. On the 1 hour chart, you can see the MACD indicator almost crossed back to the downside. And after hours, you can see we're even lower. So that ABC pattern that we had drawn out did not hit its target. And if we violate this area right here, that would basically null and void that pattern. We look out here on the 30-minute chart, and I warned you guys about this in this morning's video. I said, watch out. The MACD indicator is near the zero line. If we can't push out this area, watch out. This could be a recharge point for another leg lower in this market. And now and after hours, you can see we're already down lower. So that really sets the stage that we could be looking at a double bottom pattern out here for the NASDAQ. Now this morning, we also talked about value area high. I said, if we get back below it, watch out. We'll probably go all the way down towards the point of control, value area low. And then we wanted to talk about maybe even coming all the way down here to a price point of 432, and then all the way down here for the lows for that potential double bottom pattern. I want to make everybody aware, Apex 7 a massive 80% sale off all their valuation accounts, passing as little as 1 day. And you can also get a 150K account for only $40. You can get a 250K account for only $40. And you get a 300K account for only $40. So if you want to take advantage of this offer, use the link in the description box down below and use the promo code Mike at checkout. Now we come over and we look at the futures markets. You can see this morning I talked about maybe a bull flag pattern, but now we've broken out through the low. Or is this nothing more than a trap and a good opportunity to go ahead and try to get long this market? Now, if you do notice, where did we stop at when we came up? Right near the high volume area. If we look down to the south, we do have a little bit of volume right here. If we breach this volume area right down here, which is anywhere from about 17,540 to about 17,463, we start getting below that, then we most certainly are going to try to make another test for these lows. And think about it, anybody that's been long up in here, their stop losses are probably sitting below those lows. And if it is, guess what? We'll probably get a stop run, which means we'll likely break through those lows. We come over and we look at the volume profile levels. Notice we are closing below value area low, which comes in at 18,176.50. The point of control comes in at 18,519.00. And value area high is going to come in right up here at 18,557.00. Now, what this tells me is either tonight, tomorrow, or Friday, it's highly probable we make a retest of this level. Now, the question is, do we come all the way down lower first before coming back up to make that retest? The jury is still out. Tonight on the live stream, you'll see how I'm going to trade this, how I'm going to trade the current levels in which we're at. And last night was a fantastic night on stream. If you guys want to join me, make sure you're subscribed and you have the bell notifications turned on for all, because we do stream live Monday through Thursday at 8:45 p.m. Now, we come over and look at the SPY real quick. You can see a big, nasty, bearish engulfing candle out here today. And just like the NASDAQ, the MACD indicator on the weekly just starting to cross to the downside. And could this be left shoulder, head, some type of right shoulder over here? And then we're going to go ahead and cascade lower. We look out here on the daily chart. You can see the MACD indicator screaming to the downside. On the 4-hour chart, trying to maybe firm up in the early stages of it. Maybe we come down, make a double bottom, or maybe we firm up somewhere around this area. On the 1-hour chart, we've already had the cross, but now it looks like it may want to cross lower. If we do come back down towards these lows, I want to look and see, do we have MACD divergence setting up? Meaning, does MACD make a higher low than what it did out here earlier this week? On the 30-minute chart, you can see we did not complete the ABC pattern to the upside, nor did we fill the gap from the real-time session hours. Now, we did break back below this area over here. So now we can go ahead and disregard that ABC pattern because now it is no longer valid. Today, similar to NASDAQ, we were above value area high. So if we get back below it, watch out for the point of control, value area low. And then I talked about maybe making it all the way down here towards 514.57. Well, you know what? We simply never made it down that low. Then as we look at the futures markets, notice what we have. Just kind of chug, bink, knee jerk on the way back down. Now, notice we are now back into the 4-hour candle that made the low out here on Monday. So are we going to simply go ahead and wash substantially lower? One area I do want to watch for is going to be this high volume spike right down here, somewhere in the ballpark of 51.68. Now, if you notice right here, if we bring over a book map real quick, I want to show you guys, we have quite a bit of contracts sitting at 5,200. And then we have another bunch of contracts sitting down here at 51.50. So if we look, 51,200 is just slightly below where we're currently at, right on the edge of this minus development area. And 51.50 is just below this high volume spike right over here. So that could act as a magnet. Once we've already had high volume there, but now we have resting orders there. We have resting liquidity there, and the market may want to come down and try to grab that liquidity. Notice we almost made it back down towards the point of control. And this morning we talked about this pattern. We talked about the A to B equals C to D pattern. Notice what we did today. We came right up there. We hit the level, we took out the untested point of control, we filled the gap. So now on the futures markets, the gap was filled. However, from that point on, we went ahead and cascaded lower. And this morning I said, will we make it up towards those target levels? Basically set a trap and then come lower. Why did I say that? Yesterday was a Diaz and dog shape profile. And quite often the first way we break ends up being nothing more than a false break. And then we go the opposite direction. That's exactly what happened today. So I would have been saying the same thing this morning. If we would have broke to the downside first, then we started coming back up, I would have said the same thing, but I would have expected a trap down here to actually run the markets up higher. If we look at value area low, we are closing below it at this moment, which means tonight, tomorrow, or Friday, I expect the market to come back and test that level. 5259.75 is going to be value area low, and the point of control is all the way up here at 5336.75. The value area high will be 5358.25. So in the event that we start coming back above value area low, I do want to target the point of control. However, before we get to the point of control, I want to watch and see, do we come up into this minus development area and possibly reject back down? That's going to be right there at that 5,300 price point. And if we look at Bookmap, I just went ahead and pulled Bookmap up and scroll to that area. Look, we have a lot of orders anywhere from 5297 to 5300, which is right near that level that we just identified using volume profile. Now, if you guys want to learn more about Bookmap, there's a link in the description box down below. And if you want to learn, and if you want to know if Apex is a scam and they are still paying out their traders, watch this video right here.